It's very much looking that way. So what you've got at the moment is banks saying they're going to get out. Now, what that in effect means is they're going to wind down their businesses there or stop taking on new business. So there's going to be some kind of residual business there. But, a lot of these banks were in there for their international clients, and their international clients are getting out. So the banks are in some way just following their clients out of the door. And it's hard to see some sudden rush anytime soon of companies coming back into Russia, which presumably is probably going to mean that the banks aren't going to be going back in there anytime soon either whatever way this situation gets resolved.
Yeah, I do think about, too, right, when, specifically the oligarchs, right? This was a way of making them legitimate in the eyes of the world, right? The relationships that they had with global banks.
Exactly. So those relationships with oligarchs, there's always been a certain amount of kind of queasiness about how do these people make their money.
But they did it, right? They did it pre this war.
Yeah, so that's been long established business. These oligarchs have money with some of the world's most prestigious well-known banks, and that kind of thing is coming to an end. Being associated with these people now isn't just bad business. It looks, the optics of it to a Western audience that's political, that's the general public at large. It just doesn't look good, and so I think whatever the business rationale, they have a strong, I guess, public relations and moral case for exiting this business.
So help me understand, because as you report and our team report here in this story by you and Matt Boyle and Srinivasan Sivabalan, that a little bit of hope, the Bank of Russia today saying it's getting ready to reopen the stock market for some local shares. What does that mean for trading desks and global trading desks? This is just what then a very Russia thing and stays pretty much within the domestic market?
I think what it will mean for the international banks is that they finally get to put some kind of figure on what their potential losses are, not just for them, but also for their clients. I think also what you've got is a situation where banks are unwinding these trades. So they're looking at, their counterparties in Russia, for instance, like VTB, Russia's second largest bank. And they're at the moment in this process of unwinding, and they've worked out, who owes what. But until the market actually starts trading, there's not a lot you can do about actually closing out those positions. So I think, we'll see probably in the next few days, start to get a better idea of how much banks directly might have lost, how much their clients might have lost, and how quickly they can actually get out of these positions that they have there.
Harry, based on your reporting, we know, of course, that banks have contingency plans for all different types of scenarios. Was this something that you think banks had a contingency plan for? It's certainly something they should have had a contingency plan for, right? This isn't something that came out kind of bolt from blue. For weeks and months before this, there've been a ratchet. Right, and Russia's had sanctions put on it before, right? Crimea and more.
Exactly. So it shouldn't really be something that banks weren't prepared for. But I guess the suddenness of the sanctions, the severity of them, I think that might have surprised people. I think they probably weren't expecting something quite as significant as what we've seen. And I guess, from that, there's a question of, whether they'll learn the lesson for other situations, right? I mean, the next thing, a lot of people have been talking about is, how do they apply the lessons of this maybe perhaps to China and what could happen there in the future? I think, there'll certainly be some kind of autopsy after this to see what they got wrong and what they got right.
Well, a great read, and as we said, it is among the most read on the Bloomberg terminal. It's also the Bloomberg Big Take on this Wednesday. Harry Wilson, thank you so much. Really appreciate it. Finance reporter at Bloomberg News joining us on the phone from London.
March is Women's History Month, and every day this month we are celebrating significant moments in women's history. Now with your installment for Wednesday, March 23rd, here's Bloomberg's Renita Young.
On this day in women's history in 1917, Virginia Woolf establishes the Hogarth Press with her husband, Leonard Woolf, in the dining room of their home. They published works by key modernist writers. And on the day they established the Hogarth Press, Virginia and Leonard were walking down the street in London and saw the Excelsior Printing Supply Company window. Before that, they'd been turned down at the St. Bride School of Printing. But when they walked into Excelsior, an assistant convinced them that with the help of a 16-page booklet, they'd be able to teach themselves all they needed to start their own printing business. So the Wolfs bought a small hand printing press and launched the business. Virginia would print several of her own books, and she's now considered one of the most innovative writers of the 20th century. Through their nonlinear approaches to writing, Virginia's novels greatly influenced the narrative genre. That's Today in Women's History. I'm Renita Young, Bloomberg Radio.
A big thank you to Renita Young for today's installment in Women's History.
Folks, we're getting ready to join our TV colleagues, talk about the markets, bouncing around the equity side. Yields have come back. So what are the major stories? We'll get to that in just a moment.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session. Caroline Hyde, Taylor Riggs. We've got Katie Greifeld in the house today. And we're joined by Carol Masser and Tim Stenovic as we go cross-platform, TV, radio, YouTube to discuss, well, an about turn. Today, bonds, they rally, stocks, they drop.
Yeah, exactly, right? The only thing we can count on is volatility, you know, pick your market. What's interesting is, despite some of the downward moves here that we're seeing, U.S. stocks, we saw it in Europe overnight, you know, we continue to see money go into Chinese stocks. We're seeing it certainly in the U.S.-listed Chinese ADRs. I know I say it a lot, the NASDAQ Golden Dragon China up another 1.5%. It is up, folks, 50% in the past 7 trading days, still down 60% from that February 2021 high. But if you want to know where money is going, that is certainly one place.
I'm keeping an eye on bank stocks this afternoon under pressure as we see continued concerns about global growth, investors trying to understand just how Russia's invasion of Ukraine affects the global economy. Yields also falling a bit, of course. The KBW Bank Index down about 2.6%, 23 of 24 names in there lower. Still, though, should note up 7.7% just since March 7th earlier this month.
Yeah, it's always... No, maybe there's a bit of profit taking going on today as we see the S&P 500 off by 0.9%. 41 points lower, that's 4,570 is where we trade. Although I will note volumes once again lower, down 25% versus your usual 20-day average. Dow Jones off by more than a percentage point on the industrial average. We're currently down by 350 points. The Nasdaq, big tech, down by 0.9%. And the Russell 2000 actually underperforming, the small caps getting beaten up by 1.5%, Katie.
And if we take a look under the hood, like Tim mentioned, you can see financials really getting hit today at the bottom of the pile. So too is healthcare, maybe as Moderna takes a dive here. What's winning, though, you have energy way up top there, up almost 2%. That makes a lot of sense when you look at crude oil prices up about 2.8% right now.
Take a look at some of the individual movers as well, like we usually do. I think when you think about some of the inflationary pressures, General Mills comes to mind. They were up after boosting sort of their sales and earnings forecast for the year, passing on those costs for your Cheerios, Caroline, and some of those cereals that you love. Take a look at it.
Non-sugar version.
It's the perfect cereal, is it not?
That little hot one's super cute.
Look, I just opened up a big can of worms, didn't I? Let's move on to Affirm. They had a price target that was slashed to 80 from 140 over at Morgan Stanley, saying that they expected the buy now, pay later lender to struggle in this current macroeconomic environment, but the shares are doing the opposite. You're up about 1.6% on the day. And some of the cannabis stocks, Caroline, I did this for you, stocks like Tilray, Sundell, Growers, they were rising in pre-market.
Is that because she smokes cannabis?
It's because she did
Wait
the
a minute.
interview,
Elephant dropped in the living room.
I'm quite on into the CBD vibes, and you know we've got a
nothing
new,
wrong with that. Nothing wrong with that.
We've got a new THC retailer just across the street from the office. So you know if you need to dabble, we were just speaking, of course, to a CEO of a company that's just been doing a bit of M&A. A little bit earlier on the 1 o'clock, we had Charlie Batchel of Cresco Labs on after they spent $2 billion buying up some other companies. Let's have a little look across the board at what's happening in Taylor's favorite 2-year. We're not talking cannabis for her. We're talking bonds. Oh yes, we're talking relative strength index. I get all in on the technicals today because we have been, well, if you're looking at yields, way over and above where you should be on a technical level, above that 70, of course, this meaning that that's a technical sort of buy signal. If you reverse it, of course, you're not looking at the price here, you're looking at the yields. But this is really starting to show how fast we have rallied in the 2-year yield and how perhaps we're going to see a little turn of events. And certainly we saw that in the 20-year bond auction today.
Yeah, bonds, the new cannabis, perhaps. Or maybe Fed speakers are the new cannabis. We certainly have heard from a lot, and rightfully so, and they are definitely shaping the narrative when it comes to the trade or helping shape it. Hey, our Mike McKee, if you haven't listened to this conversation, you definitely should catch up with it. San Francisco Fed President Mary Daly, he caught up with her at the Equality Summit. Here's a little snippet of the interview, and basically she's saying the Fed's going to do whatever it has to do. Check it out.
I will absolutely confirm what Chair Powell's confirmed for himself, which is that I have everything on the table right now. If we need to do 50 is what we'll do. If we need to do 25 in balance sheet, that's what we'll do. But the data will help us determine how much is necessary.
All right, Mary Daly, of course, the president of the San Francisco Fed, catching up with our Mike McKee at the Equality Summit. So 25, 50, doing whatever they need to do, Tim.
Yeah, the part that Mike pointed out to us when he was on our program just a little earlier today is not necessarily 50 at one meeting. Perhaps if they start to, work with the balance sheet at the next meeting, then they have to take that into account then. So there could be some combo of balance sheet runoff and also raising interest rates.
Yeah, we'll see. But if you look at what the market is pricing right now, I see about 43 basis points priced into the May meeting. Whether that they also, start to run off the balance sheet, they announced that at the May meeting remains to be seen, but it sounds like there's going to be plenty of fireworks ahead.
And I think one thing, sort of bringing it back to the markets, that we've been trying to grapple with and wrestle with today is sort of if stocks can be that inflationary hedge. But if you're thinking about a big rate of change and a big magnitude of those rate hikes, Caroline, do you think about sort of that higher discount rate and then the pressure on some of those longer duration assets, like we've talked a lot about with the tech stocks, for example?
And how thus far the tech stocks have managed to weather this inflation storm. They managed to be the purchase of choice over and above the small caps, certainly. But we continue, of course, to remember that it's not just inflation that affects us, inflation affecting the United Kingdom as well, big number there, but it's also geopolitics, Russia, Ukraine, that continues to be the push on oil prices today. And Carol, I think we want to weave into that narrative just for a moment, a woman who would have cared greatly about the geopolitics of today, and the passing of Madeleine Albright, of course, something that just took us in the last hour, and something to just really focus on, a woman who just, to rise to that level, and this American dream to a certain degree.
No, first woman, right, as the U.S. Secretary of State. Tim and I were both reminiscing. One of my most memorable moments of my career was actually interviewing her over in India at a World Economic Forum event. She's Czechoslovakian, I'm Czechoslovakian, so it really kind of resonated with my heritage. But she was just incredible in terms of her level-headedness in talking about geopolitical events. And certainly, I do think this is at a time like this, you would want to know what she has to say about this event.
Yeah,
not event, but occurrence of events, if you will.
Well, on Bloomberg TV earlier today, I looked up and saw pictures of her from years ago with Vladimir Putin, and I think it's really remarkable at this time that we're reflecting on her life with what is happening in the global world right now, and what President Biden is going to be focused on when he lands in just a few hours in Europe, and he spends the next couple of days there.
Bringing us back, of course, to the current events, Tim, as we always do, and try to get the further ramifications of that. Sort of at the top of the hour, Carol, we got a lot of headlines about Jake Sullivan and some of further sanctions that maybe we're expecting, and some of those headlines that will come out in the next few days or so.
Look for some more clarity in terms of policy and what the NATO allies will be doing. We will certainly be tracking what President Biden has to say with those allies and following it. All right, we'll have more to come in less than an hour's time. We'll continue our cross-platform coverage, tackling Fed policy, Fed speakers, and geopolitical. We will continue to count you down to the closing bell on this Wednesday.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. We're going to rejoin our TV colleagues, Katie, Caroline, and Taylor there, because we will be tracking, of course, President Biden. And we will look for any kind of headlines because, I think we're all, it's amazing, a month in here on this war.
Can you believe it?
No, I cannot. And I do wonder how we will look back at this in history, just the costs and the changes maybe to come.
Yeah, massive costs, Carol. And if we think back to the conversation you and I were having just a month ago, the narrative was really around, okay, Kyiv is going to fall in a relative number of days. That has not happened. Instead, what has happened is Russia's troops, for all intents and purposes, stalled at this point. And the Ukrainian people doing an incredibly brave job of fending off those Russian troops and preventing them from taking over their cities and towns.
And yet millions have left. Millions are there, probably homes destroyed. It's just not the Ukraine that it was 1 month ago. And you also do think about the story we just talked about, the Bloomberg Big Take, the implications that Russia will certainly be a changed nation going forward in terms of the global economy. So what are the new, economic ways forward, the new geopolitical alliances going forward? What does this mean for energy policy? It's hard not to look at this and say, okay, we're going to be changing some things longer term.
Yeah, and I don't know what those changes look like, and I don't know how quickly those changes happen, especially when it comes to energy policy.
Right. We know none of this is an easy pivot, but it does feel like the speed of it has certainly picked up some momentum, and we will see, certainly as we see allies work together maybe on this. All right, you're listening to Bloomberg Business Week. Carol Massar, Tim Stenovic on this Wednesday.
Well, let's get to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Madeleine Albright, who broke gender barriers by being the first woman to serve as U.S. Secretary of State, has died. Her family says she was surrounded by her loved ones as she succumbed to cancer. She was a refugee from communist Czechoslovakia and rose to prominence here in the U.S. But in 2017, she told a summit commemorating International Women's Day, women are still facing obstacles.
A lot of young women think that the battles are won. They are not. And we have to continue to help each other and not take anything for granted.
Again, Madeleine Albright has died at the age of 84. Supreme Court nominee Ketanji Brown Jackson is facing senators again today, with Republicans trying to paint her as soft on crime and Democrats heralding the historic nature of her nomination to become the first black woman on the high court. Today on the Senate floor, Minority Leader Mitch McConnell said Jackson has been evasive, especially on the issue of adding justices to the court, referred to as court packing.
She told senators she could see both sides of the court packing debate. Where Justices Ginsburg and Breyer slammed the door, Judge Jackson leaves it open.
McConnell himself has been accused by Democrats of court packing by his refusal to allow hearings on President Obama's nominee to the court, Merrick Garland. Researchers from Moderna say a low dose of its COVID vaccine would work for kids under the age of 6. The company says it expects to seek emergency use authorization of the shots in the U.S. and Europe in the coming weeks. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So, did you see 60 Minutes? I know I always do this to you.
You know, here's the problem with 60 Minutes, okay? For me.
He hates when I do this. You could say it.
Well, we don't have traditional cable. We have all of the streaming services, and I think we have Paramount Plus, and that probably has 60 Minutes on it. So we are putting Arlo to bed right when 60 Minutes is on every Sunday night. So
you can do things on demand.
Yeah, I know. So I just need to watch it online.
Tim Stanovic, that's how the world works. You don't have to watch when it's on.
I know, but here's one thing that I know is for certain.
It was also delayed because of, I think, basketball.
Here's one thing that I know is for certain. On Monday morning, I will walk in, and Carol will talk about some amazing segment that she saw in 60 Minutes the night before.
And she's like, ugh. It's like Charlie Pellet, not Charlie Pellet, Charlie Brown.
Yeah.
Right?
Yeah.
Is it with the football?
Yeah.
Okay. Heart Tim. Okay, so anyway, there was a piece about a young couple just trying to rent in Florida, and the rents have gone up so much. And it was just really taking a look at home prices in certain parts of the world, certain parts of the country, renting in parts of the country, and just how they have gotten so much. But this story on the Bloomberg is about millennials' home dream fizzling again with again, as we see prices surging.
Let's talk numbers here. The average U.S. home price now tops $330,000.
Seems like a lot.
It does seem like a lot. Decades high inflation, well outpacing wage gains. The generation that's aged 26 to 41, me, millennial, feeling the squeeze just as they should be entering their financial prime, leading many to put off marriage and put off having kids.
Well, and this is the thing, millennials, the oldest of whom were around 27, I guess back in 08, right? We're talking about the crisis. At that point, often saddled with debt, seeking jobs in a really unforgiving market. Both the 08 recession as well as COVID-19 struck at critical times in their developing careers. So when they might have been buying homes or thinking about it, it just wasn't an opportune time.
Now we're seeing mortgage rates go higher. I tweeted this chart out earlier today. Mortgage rates for 30-year fixed right now at levels last seen in January of 2019.
So we'll probably see that in terms of a slowdown maybe in home purchasing, or people quick running to do it before rates get even higher.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ are all declining. We have got 43 minutes to go ahead of the closing bell. Right now with the S&P down 41, that is a drop of about 0.9%. Stocks are declining. Treasuries staging a small recovery from unprecedented losses ahead of tighter monetary policy to curb inflation. Right now we have got the 10-year up 17.30 seconds, 10-year yield 2.31%, 2-year yield 2.11%. The S&P down 41, down 0.9, a 1% drop for the Dow, down 348 points. NASDAQ is down 148, a drop there of 1%. The NASDAQ 100 index down 1.1%. Russell 2000 down 1.5%. Spot gold is up 0.9%, 19.39 the ounce. Oil rallying. West Texas Intermediate crude up 5.2%, 114.97 a barrel. Brent up 5.5%, 121.85 a barrel. After earnings, Adobe trading lower now by 10%, and among the names reporting after the close of trading today, we'll be hearing from KB Home. Shares now lower by 4.3%, also reporting after the closing bell today. Trip.com down now by 1.4%. I'm Charlie Pellet, and that is our Bloomberg Business Flash.
Gotcha, Charlie. Thank you so much. Well, we've been talking about some bond market stabilization today after an unprecedented rout in anticipation of higher rates to curb inflation. So we have seen some really dramatic moves, Tim.
Well, joining us now is a great voice when it comes to all things fixed income. Angelo Monolato, Senior Associate Analyst for Bloomberg Intelligence. He's with us now in the Bloomberg Interactive Brokers studio. Angelo, you write that a two-generation downtrend in Treasury yields could be coming to an end, with yields potentially finding a new range for the next several years, yet not persistently trending higher. But you're also writing that stagflation has taken hold. What do you mean by that?
Yeah, so it's exactly what we're seeing. We're seeing persistently high CPI inflation expectations that are pretty high, especially in the first few years of spot inflation. And we've seen a 10-year that jumped close to 2.4% before coming down a little bit. So we're really close to that long-term trend line. And if it does break, we don't think that means way higher yields, but we do think yields could stay in a range, maybe the next stop, if there's a next sell-off, maybe closer to 2.6%.
All right, you sound like a wonky bond strategist. Rate strategist. No, I'm just kidding. So we are trying to figure out, right, Angelo, at this point, high-low, right? Are we topping out? Could we have more downside? Could we have more upside? I mean, what, in your analysis of what we've been seeing and trying to understand these, what are pretty dramatic moves, right, for the Treasury trade, what does it tell you about it in terms of where we might go longer term?
Yeah, so in the front end, I think the Fed's abundantly clear they're going to hike fast with potentially higher increments than they have in the past or in the recent past.
So that move up makes complete sense.
Yeah, in the front end, for sure. And then in the long end, we actually flagged that 2.4% level for 10s. It seems like that's been pretty solid resistance at this point. And we had a bit of a rally today, so we could stay in a relatively close range, but a push higher could definitely happen.
So, because Tim and I have been going back and forth about what determines mortgage rates and
We talk a lot during the breaks about bonds. We do. It's like
we do, right?
Yeah.
It's an important market, right? That tells you so much. So, the move up in who knows where we're going to be in 10 years, right? We don't even really know where we're going to be in 6 months, 8 months, perhaps. So when we see, we've been watching the yield curve, the flattening of the yield curve, put it all in perspective where we are in the yield curve, the 2 and 10 perspective. What is it telling us potentially about rates to come and the global economy and inflation?
Exactly, yeah. So we've seen
that was a lot.
A massive bear flattener this year, so higher yields, flatter curves. That's basically off the Fed's hawkish sentiment. So if you break down the move in 10-year yields on the year, you see it's a little bit more balanced than it was. You have higher inflation expectations, but you also have higher real yields, so that other component if you break down 10-year yields. So we've seen around 82 basis point move. That's around 44.38. So pretty well balanced between those two of what's driving yields higher. And as you mentioned, we do have that prospective Fed tightening. Those higher yields have gone into the real economy too. We've seen higher mortgage rates, so higher fixed mortgage rates above 4%. So that tightening is definitely happening. in the economy in anticipation of the Fed and with the move in long-term interest rates.
Well, Angelo, help us understand, and look, you're not giving financial advice here, you can't do that, but, our investing audience, they want to know what it means for their portfolios, what are the implications of this for their portfolios. Does it mean when we start to see yields move higher that fixed income, after years of really not doing much in a portfolio, it starts to actually do something because we see, and that's actually kind of a good thing because of an aging population here in the U.S. and the way that when people get older, their allocations change and move more toward fixed income?
Yeah, so with higher yields, you'll have a stronger investment base. You might have people who were allocating to more risky investments kind of get back into the fixed income world. And this is actually unprecedented, the back-to-back negative returns we've been seeing in the Bloomberg Barclays Treasuries Index, or the Bloomberg Treasury Index, my bad. So yeah, with higher yields, you'll have better funding statuses. You'll have more people enter back into the fixed income landscape, potentially have to take fewer risks. But we do not think at the moment that yields will go back to those 2018 levels. We think they might stabilize at lower levels under 3%, looking at the 10-year yield.
Where are we on the inversion?
Yeah, so we do think that an inversion or like extremely pancake flat 2s 10s curve is kind of inevitable at this point because the Fed has been abundantly clear they're going to hike. They're probably
we haven't seen it yet, though.
We haven't seen 2s 10s invert. They're around 20 basis points. The slope's around 20 basis points still. But if you look at forward curves, which is just the implied forward on the spot curve, you've seen those points of the curve inverted.
Okay, so in terms of analysis, like I think about our investment audience, we're talking about, the typical bond, equity portfolio. Everybody's questioning that because bonds used to be considered, this haven to do maybe when equities were having some problems. What are you hearing from market strategists about, what we need to be thinking about in terms of investment philosophy here for the fixed income side? Are you hearing anything?
Yeah, in that framework, you have bonds massively outperforming this year, down over 6% in that underperforming. My bad, down 6% in the Bloomberg Barclays index. However, as we said, we don't anticipate a pronounced, much larger bear market in long-term yields.
All right. It's certainly keeping us on our toes, though, right? And certainly as we continue to hear certain commentary or continued commentary.
I just have curves in my head right now. I'm just like picturing the 2s.
Don't you always have curves in your head?
I do. I mean, you can do it on the terminal, too. That's what's great about it.
Appreciate it, because we know we wanted to get into it. We really wanted to get into the weeds, and we did, and really smart. Angelo Menelatos, he's Senior Associate Analyst at Bloomberg Intelligence here in our Interactive Broker Studio. 10-year note with a yield of 232, 2-year note with a yield of 211. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. In just less than half an hour's time, we're going to get back to our TV colleagues, talk about the markets once again. But coming up, we're going to do a deep dive with the chart of the day.
Yeah, we're going to be talking oil, specifically Russian oil. We'll do that with Kriti Gupta in just a few minutes. In the meantime, we are less than a half hour away from the close of trading on this Wednesday afternoon. What's going on, Charlie Pellet?
What's going on? We've got stocks lower across the board, but let me begin with crude oil because WTI West Texas Intermediate was trading above $115 a barrel. Right now, $114.85, up now by 5.1%. Brent, the global benchmark, up 5.4%, up at $121.68 a barrel. Barrel of Brent up right now by more than $6.20. The Dow, the S&P, NASDAQ all lower. Stocks are declining. Treasuries are staging a small recovery from unprecedented losses.
Okay, traders. Position opened on Bitcoin, as you can see. A couple of minutes ago, we opened, and this was short position. So I will adjust. So stay with me, it moved up, so you still have time to sell short to open position on Bitcoin. And as soon as it will move lower, we will, of course, place stop for this position. For time being, we will hold position. We will see what's going to happen next. With position, because we need to keep an eye on it. Well done, guys. If you want to get the strategy, please go to company.co.uk to find out how we trade. I don't have much time to explain why, what kind of indicators we're using, because it's you can see only one screen. We have several screens. We trade most of the pairs available in Forex market. Indices. We just don't have time to teach you how to trade. That's why we created strategy. You need to get the strategy, then follow our live trades that you can find on YouTube, Twitch, Facebook, any other streaming platforms, and practice for about a week, and then you can trade other securities that won't be seen by you on our screen. Okay, guys? For time being, if you're already in, stay with me, and I'll speak to you later. After, when we will move lower, I'll let you know what we're going to do later. Okay? Stay safe, guys.
And her chart of the day, if you want to sign up for her chart of the day, just send her an email. You can do that at kgupta129@bloomberg.net. You can also check her out on social media, on Twitter and Instagram at Kriti Gupta News. Okay, Kriti, today's chart of the day looks at the Russian Urals grade of oil. First of all, let's stop there because, you know, when we talk about oil, we often talk about Brent crude, the international benchmark, and West Texas Intermediate, the U.S. benchmark. What's the Urals grade of oil?
Yeah, well, there is several different types of grades of oil. So you have the benchmark, which is when you say, you know, oil's hitting $100 a barrel, you tend to look at Brent or you tend to look at WTI, to your point. But every country that produces oil has their own kind of grade of it, which is essentially their own personal brand of oil, basically. So the Urals grade is named, of course, after the Urals Mountains in Russia, and it's the Russian grade of oil. It's basically very similar in terms of what it's kind of made of and what you can use it for to WTI, and that every type of oil from different regions can be made into different things: gasoline, jet fuel, diesel for Europe. So Russia's output is very similar to that of what we get here in the States.
So why should we know about this? It's my, the why, Mike.
You got to be prepared for the Carol Masser question there.
I know. Well, let me just explain what my chart of the day is first here. My chart of the day is essentially the benchmark, the difference, the spread between the Russian barrels, the Urals grade, versus the Brent benchmark. And it's down to, I think, about $30 in terms of difference. And this is a really big deal because everything kind of trades a different price anyway. But to see it trade at this big of a discount from Russia is a huge deal because it means that Russia isn't getting as much per barrel as it normally would. So in some ways, they're kind of effectively losing money on the barrel. They're not making as much as they could have. And a lot of that comes off the back of sanctions and people saying, we're just not going to import Russian barrels anymore. But there are some countries that are still doing it. So it kind of is seen as a bargain.
That's what we call the technical difficulty, and we're hopefully we can get back to Creedy, who was just talking about our chart of the day.
You still with us, Creedy? All right, we're going to work to get Creedy back and talk more oil. Again, if you want to sign up for her chart of the day, just send her an email. You can do that at kgupta129@bloomberg.net. kgupta129@bloomberg.net. Check out her on Twitter and Instagram. You can do that at Creedy Gupta News.
And bottom line, that chart, no bidders. Russia's Urals grade trades at large discount to Brent as cargoes find few buyers. And this is certainly what we're seeing in the energy market. And because of the pullback from all things Russia, right, certainly financially, because of sanctions and so on, and they're a significant player in the energy markets. You are seeing, as Creedy was explaining, each nation and each area of the energy trade having its different type of crude, if you will. And so right now the prices come down a lot, and we'll see whether or not who will be buying. Right now, it doesn't look like many.
I want to draw our attention to Creedy's Ion story today. It's what she sends us ahead of time, and it's something that piques her interest. And this one, again, about energy. This one piqued my interest when I saw it earlier today, too, Carol. It's about Vladimir Putin demanding ruble payment for gas escalating the energy fight. Russia planning to demand ruble payments for natural gas purchases from European nations, deepening its standoff with the West and potentially aggravating Europe's worst energy crunch since the 1970s.
Creedy, we got you back. Technical difficulties aside, we're just talking about what you have your eye on about this story about Vladimir Putin demanding ruble payment for gas. What really jumped out? Why did you want to bring this to our attention?
Yeah, well, I just talked about how India, for example, is negotiating agreements of trade between Russia and India in oil, negotiating rupee ruble agreements. But it's interesting because Russia's kind of trying to do this with other countries, specifically Europe, which has this massive dependence. And one of the big issues right now that I think more directly affects the West here is what if Europe says no? Does that mean that those gas supplies are really cut off? And I think that's the big question. You already had Italy saying, we're not interested in paying in rubles. And you could see that in some ways they're trying to prop up their own currency. So there's a lot going on here.
Yeah, absolutely. And you've been really tracking it, especially when it comes to the energy trade, just so well. So we said, again, that chart, if you're interested, and you should be, sign up for Creedy's chart of the day at kgupta129@bloomberg.net. Check her out, too, at Twitter and Instagram at Creedy Gupta News.
Hey, Carol, something that you mentioned throughout the program today is with President Biden's trip to Europe. Mm-hmm. We are expecting him to land in Brussels in the next 10 minutes, and we expect to see pictures there, too. How it reshapes talks about energy independence for Europe moving forward.
Yeah, and we are expecting, some more news on that front, because Europe's certainly the most impacted as a result of this war.
Let's get to world and national news. Standing by, we have Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. Former Secretary of State Madeleine Albright has died at the age of 84 from cancer. She was the first woman U.S. Secretary of State under former President Bill Clinton. In 2018, she participated in a forum at Wellesley College.
I loved foreign policy, there's no question. Wherever we went, I started an international relations club and made myself president of it.
Albright also received the Presidential Medal of Freedom in 2012. Her family says she died surrounded by family and friends. The Biden administration today announced it has determined Russia has committed war crimes in Ukraine, citing the destruction of civilian targets like schools and hospitals. And President Biden is warning Russia could use chemical weapons. He's expected to land in Brussels in minutes. He's going to press for even more sanctions from European allies. We spoke with Commerce Secretary Gina Raimondo.
Yes, we're thinking of what's the next piece of escalation, but I think we just have to stay strong and vigilant in a tight coalition and focused on enforcement, because he's already feeling pain, and every week that will intensify.
Commerce Secretary Raimondo spoke at the Bloomberg Equality Summit. French President Emmanuel Macron's office says the EU is looking to ratchet up existing sanctions without cutting off oil and gas purchases from Russia. Chinese authorities investigating the crash of a Boeing 737-800 jet this week say they found the cockpit voice recorder from the flight. It's being sent to Beijing for repair and analysis. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons in our Washington, D.C. bureau. So we continue to track what firms, companies are doing in terms of post-pandemic, coming back, hybrid work. Tim and I, about a week and a half or so ago at
I was like, what were you going to say? We've been here the whole time. We're not working from home.
I worked, well, you've been here the whole time. I worked home for 4 months, 5 months, 6 months.
You did. Yeah.
From about March to, not until really Thanksgiving did I come back fully.
Yeah, just have a toddler running around.
I know.
You know, and need get you back to the office.
I just had the dog. Scat was barking in the background. All right. So anyway, we're trying to figure out work shifting, Bloomberg Live event that we did about a week and a half ago, just looking at how things are looking, how we work, use of real estate space, technology. And we continue to track, especially the financial community and what's going on, because it certainly impacts the city here. UBS apparently saying it's going to allow some of its U.S. employees to work remotely full-time, offering flexibility to staff as it really seeks to lure and retain talent. That's the other side of this, right?
Yeah, this is really interesting because of the talent retention element of this that we talked about recently at work shifting. The Swiss Bank expects about 10% of its workforce, its workers in the U.S., that is, to go remote as the program is implemented in phases, starting with the wealth unit. That's according to Tom Naradel, the president of UBS Americas. We've spoken to him before. About 10 to 15% of them will be in the office full-time, while more than 70% will be in hybrid roles. Of the firm's more than 20,500 U.S. employees, about 800, that's it, currently work remotely.
So it's a small percentage.
For now.
A little perspective. UBS adapting as U.S. workers across industries have quit jobs at near record rates, and Wall Street faces what the president of UBS Americas describes as a talent drought. Even as wages rise, financial firms face demands for more flexibility from workers expected to put in long hours. Tom Naradel of UBS Americas saying that the industry risks losing talent if it's not able to adapt. We've heard this a lot.
If only 10% to 15% of roles are 5-day-a-week roles, he said, that shows that how significant it is. Someone may find at a particular point in their life, maybe because of a family situation, that they may not want to be 100% remote.
Yeah, I mean, we're definitely seeing that in terms of what's important. You know, it used to be like often salary at the top, and we're increasingly, hearing about flexibility. All right, you're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. To bounce off the bottom, but still red on the screen. 13 minutes to go with the Dow, the S&P, NASDAQ all in the red, with the S&P down 37 right now, down 0.8%. The Dow down 337, down by 1%. NASDAQ is down 116 for the NASDAQ Composite Index, a drop right now of 0.8%. The NASDAQ 100 Index down 0.9%. Russell 2000 lower by 1.4%. Today's declines follow rallies for the S&P in 5 of the past 6 sessions. Stocks are lower. Treasuries are staging a small recovery from unprecedented losses ahead of tighter monetary policy to curb inflation. 10-year yield 2.31%. We've got the 2-year yield 2.10%. Gold up 1.2%, $19.45 the ounce. Again, recapping equities lower. S&P down 40, a drop of 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Russia's invasion of Ukraine has reminded the U.S. and Europe that their alliance matters. Their united response to the war should alert them to something else, that resilience depends on economic cooperation, not just security commitments. In that light, reviving stalled talks on a free trade agreement is more urgent than ever. Negotiations over the Transatlantic Trade and Investment Partnership, which could have led to a fully formed U.S.-EU free trade area, were halted during the Trump administration. With President Biden traveling to Europe this week, the time may be right to restart discussions. The allies have a crisis to manage, of course, so commerce won't be at the front of anyone's mind. But Putin's war has shown just how crucial it is for the U.S. and Europe to have strong partnerships. That means cooperating on trade, as well as security. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session, and bouncing around in the equity trade, pretty much hovering near our lows of the session, down more than 1%, as you heard from Charlie, on each of those major equity averages. It's really been a bond market story, though, this week. We saw a rout. We saw yields move up, but yields backing off a little bit. 10-year note with a yield of 231 and that 2-year note with a yield of 210.
You're going to hear what our next guest has to think about the market environment, the investing environment, and more. Doug Ramsey, Chief Investment Officer at the Luthold Group. He joins us on the phone from Minneapolis. Doug, it's good to chat with you again. How are you?
I'm doing well, and by the way, happy anniversary. It's the second anniversary of the bull market today. Not a great way to celebrate it, huh?
No, it's not. And also, so let's talk numbers there. 100% for the S&P 500 in 2 years, 108% for the NASDAQ 100. And if my memory serves me correctly, about 87% for the Dow Jones Industrial Average from 2 years ago to now.
But that's because we fell off a cliff, right?
We did.
When everything shut down? I mean, perspective, kids.
Wow, Carol.
No, I'm just kidding.
I'm not inviting you to my birthday.
Well, it's just like, Doug, how do we look at this stuff, right? Like, I mean, we understood why markets fell off, right? I mean, everything.
My birthday.
Well, it's just like, Doug, how do we look at this stuff, right? Like, I mean, we understood why markets fell off, right? I mean, everything.
Oil literally went to negative.
And we understood why we bounced back, because we saw a lot of stimulus pumped into it, and things. We started to figure out a way forward here, right? But help us out. You're the expert.
Well, I mean, if you take the idea that the cycle is only 2 years old, it's at face value, I think you've got to say, well, it's aged in dog years. Because if you look at where we are with so many cycle indicators, I mean, starting with valuations, we began the run at the highest valuations you'd ever seen at a bear market low, and of course we're far higher, being a double, although earnings have come up incredibly from the COVID lows. But, I mean, unemployment below 4. You know, technically we're operating below full employment. Yield curve flattening. Real incomes actually falling. I mean, this is very late cycle stuff. So either you say, well, it's, you know, a 2-year cycle that's aged like a dog. In other words, it's like 13 or 14 years. Or, you know, I think it's valid to date this entire upswing back to 2009 and just say the COVID pandemic was, it was a massive interruption, but really because of the rescue measures that were put in place, we're right back to where we might have been had we never had the pandemic.
But then roll in, okay, sorry, I'm jumping.
No, go ahead, Carol.
But then roll in now the Russian invasion, Russian war of Ukraine, another round of volatility of the markets. I mean, you know, every time we say this, we talk about, of course, the humanitarian costs, because I don't want to feel like we're just cold and all we care about the financial markets. That's not the case. But nonetheless, it has added another element to the trade here and to uncertainty. So how do you factor that in? Or I don't know, how do you do it?
Well, I mean, it's interesting. You know, there was the debate prior to the Ukrainian situation about, you know, will the Fed go 50 basis points at the first meeting and the next meeting? Well, I mean, look at the increase in prices at the pump and look at the increase in mortgage rates, which is coming since they're based off the 10-year Treasury, which is up 60 basis points just this month. And then the effective rate hike from the increase in gasoline prices. I mean, I've got to believe that between the bond market and the commodities market, and I haven't even mentioned what's likely to happen here with food prices, I mean, that's, in my mind, like 3 or 4 or 5 50 basis points of hikes. I mean, 5 50 basis point moves in terms of its impact on consumer and businesses.
Okay, so let's say, look, and it absolutely makes sense, but are we seeing this play out in the equity market right now? Because on the S&P 500, we're down, what, roughly 7% from all-time highs. That's it.
Yeah, not much. We were down 13 at the lows. It's been a vicious rally that, to our mind, is counter trend. I don't really like to throw around the bear market term. I think it's better to think about what's the primary trend right now. I do think it's down. I think we're very likely to undercut those lows.
Wow.
As the Fed continues to hike into what looks like a slowing economy, and on top of other hikes that the free markets, i.e. the commodity markets and the bond market, have issued. So that's our thinking, and I don't like to put targets on it. You know, we just assess the situation as it goes. You know, sort of our fair value or long-term median valuation work is way below where we are. But
Doug, let me just jump in. What about all the research that's out there that typically early on in a rate hiking cycle by the U.S. Central Bank, that equities tend to gain off of that? I mean, no one, even Mary Daly, you know, in her conversation with Michael McKee, we keep hearing from Fed speakers that they don't really expect the U.S. to go into a recession. So we are still seeing U.S. economic growth. We aren't seeing, you know, estimates when it comes to, you know, I'm thinking about the quarterly updates that we're going to be getting in terms of revenue growth, maybe not as strong as it's been, but still seeing growth. So we're not seeing that come down. Doesn't that, to some extent, rose-colored glasses maybe I'm putting on, doesn't that provide some support for the equity trade? Or is that already factored in your view?
Well, it's correct. I mean, the first couple of rate hikes, I mean, it used to be 3 steps and a stumble. We've only had 1 step. And you're right, the market does usually absorb those first few hikes very well, but just in the context of where we are with so many of these cyclical indicators, you know, we've never waited for consumer price inflation and wage inflation to be this hot before we started hiking. You know, we've never had an economy operating beyond full employment, which is what the Congressional Budget Office tells us. I mean, it's pretty remarkable stuff. So I'm just looking at this first rate hike in the context of the broader cycle, and it's extremely late.
Well, Doug, what does our investing audience need to know about how they position themselves for an environment like this?
Well, I mean, we had a heck of a rally. 8% off of the lows. We gave back a little bit of it today. I mean, if you're fully invested in equities here, I mean, it's certainly not too late to pull back. I mean, down 7 or 8% off the highs in the S&P. I mean, obviously, a lot of stuff is down considerably more than that. But I think
so. You're really bearish
for caution. Well, we're positioned defensively. I mean, I'll give you a sense just in terms of our own tactical funds
just
parameters.
Quickly, yeah.
We can shift between 70% is max bullish, 30% is max bearish in terms of our net equity exposure. We just, in response to this rally, we increased the hedges somewhat. We're at 47% in our tactical funds. So not as bearish as we could get. And I suspect if it rallies further, we'll probably sell into it.
Doug Ramsey, we got to run. Thank you so much. Really appreciate it. All right, folks, time to head over to our TV team for Beyond the Bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld in the house, counting you down to the closing bell. Here to take us beyond that bell. It's our global simulcast, of course. Carol Masser, Tim Stenovic, as we go cross-platform TV, radio, YouTube to discuss what is, well, a pullback in sentiment somewhat, a pullback in risk on a trade, and certainly a little bit of profit taking, Carol.
Yeah, it really is. You certainly feel the tone a little bit different than what we've been seeing certainly yesterday. And I think about what Tim said earlier in terms of those bank stocks, those financials really taking it on the chin. Really your worst performer here. If I look at the S&P major industry groups, down about 1.7%, Tim.
Carol and I just had a great chat with Doug Ramsey, the CIO at the Luthold Group, who's really defensive right now and said, essentially, you know, if you're still fully in the market right now, it's not too late to pull back. Because he thinks that the lows that we saw last week could be undercut.
Interesting. I guess that's what makes markets. I think we heard maybe a little bit of a different tone coming from Emily Rowland of John Hancock, saying that still the fundamentals look good, particularly when you're looking at credit, and certainly liking some of those investment grade names, as well as sort of hinting, Katie, that inversion of a yield curve, if we get it, doesn't immediately say panic.
Yeah, I mean, there's two sides to every trade. We're definitely seeing that now, but I think that's a great point on the yield curve that actually the 12 months after inversion, they tend to be kind of okay for equities. And of course, you have to consider the magnitude of any inversion. Of course, we're talking about this now with the 2s-10s curve about 20 basis points away from that negative territory.
I mean, well, wasn't I just being led to believe that it's a 3-month tenure that means you buy meme stocks? So there we have it. Who knew?
I did it. My job is done. I can go home now.
There's the technical buy factor. Meanwhile, we're looking at the S&P 500 not having a buy signal today. We're down by 55 points. As those bells ring, we're off by 1.25% on the S&P 500, 4,455. We're down to a similar degree, 1.3% on the Dow Jones Industrial Average. We're off by 450 points, let's call it. NASDAQ off by 186 points, 1.32% to the downside. Russell 2000 was the underperformer. Those small caps getting beaten up today. Let's have a little pull out and see how the Russell 2000 fell by 1.7%. But context is due, as of course we have seen in the past week, a significant amount of buying in stocks, Taylor and Carol.
And all of us, right?
And all
There's
of
a lot
you.
going
All
on.
of you.
We're a family. Hey, let's, Caroline, you're breaking down those major equity averages, and we're pretty much on the S&P and Dow, NASDAQ, finishing at those lows of this session. S&P 500, just a little bit of a further breakdown. 413 names in the index lower today. So, as Caroline mentioned, definitely risk-off trade here on the equity side. Only 90 names. Taylor gaining some ground.
Yeah, and you certainly see that within the sector level too, Carol, right? Take a look at the sector winners and the sector losers. There's actually only 4 sectors within the S&Ps. We dive down about 2 notches lower that are still in the green. Of course, energy continues to be in that trade after another big day for crude markets. Energy's up about 1.8%. Technology and autos are still up there as well, but certainly not getting the big boost the likes of energy has. Everything else for our radio audience is actually pretty red, and it's pretty red on the screen. I take you down to what here has been the big underperformer on the day. It's a lot of the banks. Now, we've talked a lot about today being the yield story kind of day. And then it's tech, right? It's semiconductors, hardware equipment, and software and services. And that sort of, Carol, has been an interesting theme, is when yields have been falling, tech traditionally has been some of the big outperformer, but not today.
No, exactly. All right, so let's get to some of the day's gainers, and certainly kicking around a lot, quite a range here. Those Chinese stocks, I mentioned it earlier, we did see a bounce back, and they continue to see money pouring into it. One of the big gainers in the Chinese trade, those U.S. listed Chinese ADRs, was PDD, up another 4%. 4%, but at its highs today, guys, it was up almost 17%, but finishing the day with a gain of about 4%. So it's been on quite a run here. Enphase Energy, Taylor talking about energy. We continue to see gyrations as that shift potentially will take some time from fossil fuel to others, but those in the solar space continue to get attention. Enphase Energy among them, at its highs up almost 5%, finishing the day still though with about a 0.5% gain. It's up for 7 days in a row, so it's been on quite a run. And a little known company named Apple, which was up 2.25% earlier in this session, still holding on to a gain of just under 1% here. A lot of analysts out talking about expectations of signs of robust iPhone 13 demand, so that certainly give a kick to Apple in today's trade.
Hey, speaking of Apple, we got a headline from Google about something that Apple is certainly keeping an eye on. Google is going to let app developers offer their own billing systems. The Google Play Store is beginning a test of outside billing with Spotify. This for years has been an issue for app developers. It's huge, who've complained about Apple and Google's Android system essentially being a gatekeeper and taking a toll when somebody uses in-app purchases or subscribes to something through the App Store of their respective platforms. Watching shares of Apple and After Hours not moving much at this point, and we know that's an issue that app developers have complained about for years at this point.
30% commission, what was it? Google cut it to 15%, but this is huge for the companies like Spotify. This is why you know that Epic Games has been taking Apple to court. There's frustration from app developers that they had to give so much of the cut for in-app purchases. I mean, I was interviewing a app developer just the other day. Fan House was all about really the frustration of Apple and how much of a chunk of change they take whenever a purchase is made via the Play Store or via your App Store.
And their argument, of course, Caroline, is that they're the ones who are providing access to this customer, right? And they're, of course, keeping the App Store safe for their customers. But yeah, important to watch Spotify and After Hours higher by about 2% right now, and then we'll keep an eye on Apple as well. Hey, let's get to some of the decliners that we saw today. Speaking of tech, talking about Adobe, shares finished the day down by more than 9%, falling after the company gave an outlook that was seen as disappointing. The company actually referenced stopping sales in Russia and Belarus as part of the issue in its guidance. Shares falling 9.3%. We saw price target cuts at Credit Suisse, Deutsche Bank, Piper Sandler, Barclays, and more. Okta, the digital identity verification company, shares falling for a second day in a row over this hack, at least 2 downgrades due to the breach. The company did say earlier today, or late yesterday, I should say, that about 2.5% of its customers may have been affected. And then Cresco Labs, the marijuana company, finished the down 7.5%. We interviewed the CEO of the company earlier today on Quick Take. I know you did as well on Bloomberg TV. Charlie Bachtell, who said that businesses are very complementary, and I'm talking about the acquisition to buy Columbia Care for about $2 billion in equity, create a multi-state operator in about 17 states. So a pretty big acquisition when it comes to the marijuana industry.
M&A that we've actually kind of seen on hold a little bit amid this geopolitical tension and market turmoil. Of course, geopolitical tension still very much affecting the commodity space. We go cross-asset for our audience, and I look at Brent crude up 5%, WTI up almost 5%, $114 is where we trade at the moment. As we see supply-side concerns once again, this is inventories pulled back in the United States. That data not looking so pretty. We have concerns about the Black Sea as well and some of the export terminals there. So overall, the supply side, a headache for oil that pushes it higher. Steel up more than 1.3%. We see zinc up, metals catching a bid. Interestingly, overall, we do continue to see this inflationary pressure coming from commodities that feeds into the FX market. Overall, Aussie dollar up 0.4%, a commodity-related currency. Norwegian krone up 0.8% as it feeds off the oil move. Notable British pound off by 0.4%. This is a buy the rumor, sell the fact kind of a day for the British pound, because this is inflation running hot once again. Gas prices, need I say more? The UK seeing a 30-year high in its inflation rate, and that's why, of course, we start to see the concerns about what Rishi Sunak, what some of the Treasury Department can do to alleviate the stress on the consumer, and what really it can do to alleviate any sort of risk of a recession in the UK. I look, therefore, at a mixed picture in the bond market. The United Kingdom, the gilt market catching a bid on the 30-year, but overall, we sell off in Japan, United States, well, Canada for once, actually seeing a real pullback in yields on the 30-year, and it's kind of a similar story in the US, Taylor.
It is as well, sort of price higher, yield lower, as we're going into safety again today. And Carol, I'll keep it quick. I think just sort of what's notable is the last 2 to 3 days of yields higher. So that helps put into perspective some of the yield drop that we have today. You're back down to a 210 on the 2-year and a 229 on the 10-year. And this sort of brings up this theme of what the bond market's telling us about, is this sort of another big rally in the equity market that we get in the midst of broader bear markets? Or as you were speaking to your earlier guest, more just sort of defensive moves that are underway?
Well, I'm going to say what, the 2-year anniversary, right, from the COVID drop in terms of markets. And it's really kind of amazing, Katie, you know, the volatility, the moves that we've seen in the last 2 years, and yet we are still in a market environment where there are a lot of questions out there.
A lot of questions, big questions about the Federal Reserve in particular. I mean, the reason buy the dip worked over the past 2 years was you knew the Fed was there to backstop markets at pretty much any sign of turbulence. That's not the case now. So where we're headed over the next 2 years, I mean, it's a great question.
100%, roughly, the S&P 500 has increased since that day 2 years ago. The NASDAQ 100, about 108%.
We were at 2237 on the S&P 500, and we're at 4456. So a little perspective. All right, guys, a lot going on. We covered a lot of ground, and we're, of course, waiting for more ground to be covered as President Biden gets to Europe, and we'll be following all of those headlines as well. That's going to do it, though, for our cross-platform coverage on radio, TV, and YouTube. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, I just said to you, I was going back 2 years ago on both the S&P and the Dow, and I'm like, wait a minute, is this wrong? Did I read something wrong? But yeah, S&P, March 23rd, 2020, it closed at 2237. And we're at 4456 today. Dow Jones Industrial Average on 3/23/2020, closing at 18,591, and we are at 34,358.
We were talking a little earlier about just going back to thinking where we were on this day 2 years ago. I mean, all of us, not all of us, but all of us people I was talking today, had just started working from home. I think a lot of people were really scared too. It was a time when there was not just panic in the markets, but I remember the conversations I was having with my family around the country, and just the way we were feeling here in New York and in different parts of the U.S.
Sorry, just dropped my mic. It was definitely an unsettling time, and it was a case of, certainly market uncertainty, economic uncertainty, but we were all worried about our health and everybody else's health in our lives. So it's been a crazy couple of years, and like I said, we've got a lot of questions still out there.
Well, let's get to Nancy Lyons for Check the World and National News now. She's standing by in our 99.1 newsroom. Hey, Nance.
Thanks, Tim. Madeleine Albright, the first female Secretary of State, has died at the age of 84. Her family released a statement saying the cause was cancer. Albright was born in Prague and came to the U.S. as a refugee in 1948. She was the granddaughter of Holocaust victims. Her career in public service in the United States culminated with her receiving the highest civilian honor, the Presidential Medal of Freedom, in 2012 from President Obama.
As the first woman to serve as America's top diplomat, Madeleine's courage and toughness helped bring peace to the Balkans and paved the way for progress in some of the most unstable corners of the world.
Again, Madeleine Albright, dead at the age of 84. The State Department says it has made a formal assessment that Russian forces have committed war crimes in Ukraine. Ambassador at Large for Global Criminal Justice, Beth Van Schok, says it's clear Russian forces are targeting civilians.
There have been numerous credible reports of hospitals, schools, theaters, etc., being intentionally attacked, as well as indiscriminate attacks. Russia's forces have destroyed apartment buildings, schools, hospitals, other elements of the critical civilian infrastructure.
Ambassador Van Schok says Ukrainians are collecting evidence now with an eye toward future accountability. Supreme Court nominee Ketanji Brown Jackson is spending a second day taking questions from lawmakers on the Senate Judiciary Committee. Outside witnesses will testify tomorrow. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. We have a bevy of real estate stories, kind of on the higher end of things, right, for the most part?
Yeah, we do. Yeah, we do, and we have one that talks a little bit about the corporate side of things and some residential.
Right.
And, even an island if you're into it.
I'm totally into an island, but let's start with the corporate stuff.
Okay, so Related Companies is the developer behind Manhattan's Hudson Yards and many more. They're making their first foray into the Miami office market. It's led by the billionaire chairman Stephen Ross, and it's working with the Hong Kong-based Swire Properties to develop a super tall building in Brickell. It's a key commercial district in Miami. That's according to a person familiar with the matter.
Yeah, Miami has seen a surge in office leasing since the pandemic. We've talked with a lot of individuals, especially within the financial community, who have relocated down to Florida. Miami, as we said, surge in office leasing since the pandemic started as companies increasingly target Florida for new offices. Ross putting out a statement that New York-based Related plans to start work in 2023 on Florida's tallest and largest office tower.
Okay, from one coast to another coast.
Where are we going?
We're
Malibu?
going more my speed to Malibu, yeah.
I love Malibu.
So this story catching our attention, Carol, you actually sent this to me by Catherine Clark in the Wall Street Journal.
Yep, popping up among the most read. Mark Andreessen, big name, certainly in Silicon Valley in the VC space, and his wife have purchased another trophy home in Malibu, this time for a mere $44.5 million. This is according to people familiar with the deal.
They got a deal because it was originally listed for $55 million.
On sale.
And it's 4 bedrooms. It's located on
We'll throw in
Escondido
cushions
Beach.
for the deck furniture.
Yeah. I know, you're right.
Okay,
it was
sorry.
listed about a year ago, June 2021, on Escondido Beach. It comes on the heels of the Andreessen's purchase of a $177 million property from the fashion mogul Serge Azaria.
And if that doesn't, can I move on?
Yeah, move on.
That doesn't float your boat. Jeffrey Epstein's private islands in the Caribbean, this is also from the Wall Street Journal, to list for $125 million.
Yeah, I'll go Malibu. What about you?
U.S. Virgin Islands. I do love the Caribbean.
Okay.
Just saying.
Yeah.
It's
Well,
nothing
you have
like
to get
the Caribbean.
to the island.
It's
Okay.
nothing like Caribbean waters.
Yeah.
Okay, but
I'm
ew,
California.
Maybe ew.
Yeah.
All right. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, KB Home, reporting earnings per share for the first quarter that missed the average analyst estimate. It was a down day on Wall Street with the Dow, the S&P, and NASDAQ all declining. Today's move lower follows rallies in 5 of the past 6 sessions, a lot of the selling coming in the final few minutes of trading. Stocks declined. Treasury staged a small recovery from unprecedented losses ahead of tighter monetary policy to curb inflation. Financials led the way lower. S&P down 55, down 1.2%. The Dow down 449, down 1.3%. NASDAQ down 186, a drop there of 1.3%. Again, much of the selling coming in the final few minutes of trading. 10-year yield 2.28%. The 2-year yield 2.09%. Spot gold up 1.3%, 19.47 the ounce. West Texas Intermediate crude up 5% today, 114.77 a barrel on WTI. Briefly, Kellogg Pop-Tarts brand is launching a Snickerdoodle flavored toaster pastry this May. Yes, it'll be the company's third cookie-inspired toaster pastry, joining the frosted chocolate chip and cookies and cream varieties. Okay. Interestingly, Kellogg shares up today by 0.8% on the day when the rest of the market moved lower. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I gotta say, I did love cinnamon Pop-Tarts, when I was pregnant, and strawberry. Remember, it was the strawberry go-rounds. What were they called? Merry-go-rounds?
I don't even know what those are.
Remember that?
My parents never let me eat these things.
Well, you obviously had better parents than I did. No, I had great parents. All right, so London, Manhattan, South Florida, long been popular destinations for Russian cash, often in the form of real estate purchases. And we thought we wanted to get a little bit more of a view on kind of what has changed since the Russian invasion war with Ukraine as a result of that.
Joining us now is Erin Sykes. She's chief economist and licensed real estate salesperson at Nest Seekers International. She joins us via Zoom from Florida. Erin, how are you?
Hi, I'm great. How are you?
Doing well. Good to have you with us. So let's just, before we get into what's going on with Russians and real estate, I just want you to remind our viewers and listeners right now about Nest Seekers International and what the focus is at the firm.
Sure. We were founded about 20 years ago, right after 9/11, in the heart of downtown Manhattan. And we have a number of offices throughout the Northeast, particularly in the city and also out in the Hamptons. And we have recently expanded to South Florida, Miami, Palm Beach, all of the great vacation locations in Aspen, Colorado, all of the Colorado locations, so many. We've got 30 offices now, so taking over. Plus, we have a large media component in selling the Hamptons and a couple other different shows.
Well, tell us a little bit about the volume of property sales that you've dealt with, for example, or that the firm has dealt with in the last 12 months, which is a great indicator of kind of what's going on in the global economy and just kind of the volume you're seeing.
Sure. So we, as Nest Seekers, are a boutique firm, and we had over $5 billion in sales last year, which is double what we had the year prior. And of course, this does not match up with the larger public companies like Compass and Element. However, for a boutique firm, still privately owned, $5 billion in yearly sales is it's incredible. So now what we're seeing throughout the Palm Beach and Miami markets is not any cooling at all. There's still significantly more demand than there are properties available. Still a lot of bidding wars going on, and we haven't really seen any impact from that 1/4 point rate hike because most of our buyers are high net worth, looking to move.
Yeah, they're not taking out 30-year fixed rate mortgages, right? They're just buying cash.
Well,
exactly.
Well, who's buying? Because we do want to get to, in terms of Russian buying. My understanding, it's, Russian money coming into U.S. real estate, certainly the high end. It's a very small part of some of the markets like Manhattan overall. But tell us about what was the trend and what is the trend today when it comes to Russian buying of especially luxury properties in the U.S.
Yeah, so if you look at Central Park South, we often call it the most expensive safe deposit box because a lot of unstable countries, their large high net worth individuals have purchased Central Park South, Central Park West, Central Park East, and then also down in Sunny Isles, particularly with Russians, and also Palm Beach, places where the value maintains, it's very stable, or you'll see appreciation over the years. Not risky investments for international investors overall. Now, that said, we have seen some uptick in the in market movement in those areas that are highly invested by Russians. However, it's not this, wham bam, slap it up on MLS that most people have been depicting. It's mostly quiet, off-market sales or smaller sales, not the $50 billion apartments that we almost want it to be, because that's a better story, right? It's a couple million, $5 million apartments that maybe those investors of Russian nationality are getting a little bit nervous. But frankly, those who have investments, 20, 30, 40, $50 million properties and above, they already long ago moved those into irrevocable trusts, so they cannot be seized. So it's not as cut and dry as, all of Russians are just trying to liquidate all of their assets. That's not exactly what's going on.
It's interesting to hear. Give us some color on what's going on in the Hamptons right now. In addition to what's happening, we've heard so much about South Florida. We've heard a lot about Manhattan and the real estate just rising so much there. What's happening in the Hamptons?
Hamptons has been very stable. I mean, we obviously saw a lot of movement there and a lot of price appreciation over the last couple of years. And what we've seen since about the summer until now is just complete stability. Prices are not shifting up and down. Inventory is still relatively low. There's been a little bit more coming on. People are already locking in those rentals for the summer. So still a very strong market.
Well, that's interesting. Are we at pre-pandemic levels or even above it, potentially?
Oh, well, we're well above pre-pandemic levels in terms of, availability, well below, in terms of pricing, well above. So we're still in that, high demand type of situation. In the Hamptons, people have often shifted their residences, which we've all, just been discussing for a couple of years now. So they're sticking it out in the Hamptons. Their kids are in school out there. I think that's the bigger story at this point, is how can the Hamptons infrastructure support this new wave of full-time residents that did not leave?
Erin, just really quickly, 15 seconds, the hottest market that you guys are dealing with where there's just incredible demand?
Palm Beach, hands down. There are 10 homes for sale total on the entire island right now, and price per square foot is well above $3,500 average.
A lot of it financial types, just quickly.
Yes, financial types. Goldman Sachs guys moving down to open that new trading office.
All right, we got to run. Erin, thank you so much. Erin Sykes, chief economist, licensed real estate salesperson at Nest Seekers International, joining us via Zoom in Palm Beach. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. We've got a treat, a duo. We're going to talk about their partnership, but I feel like we have a million questions we can go.
Yeah, we're going to be chatting with Don Katz, the founder and CEO of Audible.com, also the founder of Newark Venture Partners, and Sam Caiucci, the CEO of One Huddle. They're going to be joining us on the phone from Newark, New Jersey. They've got some cool stuff that they're working on.
I love Audible. All right, first up, let's get back to your top business stories. A check on the trading day. Here is once again Charlie Pellett.
Thank you very much. It was a down day on Wall Street with the Dow, the S&P, and NASDAQ all declining today. Treasury staged a small recovery from unprecedented losses ahead of tighter monetary policy to curb inflation. Lindsay Piegza is chief economist at Stifel Nicolaus.
The Fed has been very clear that they will do everything they can to rein in out of control inflation. So at the very least, the market is looking and saying, well, we may see slower growth, we may see a recessionary scenario, but we're going to avoid stagflation.
Stagflation defined as slow economic growth along with inflation. Down day, as I mentioned, the S&P fell 1.2% today, down 55 points. Dow Industrials down 448, a drop there of 1.3%. NASDAQ down 186. For NASDAQ, that was a drop today of just about 1.3%. This headline from the Bloomberg Professional Service: the U.S. has restored 64% of product exclusions from Trump-China duties. Shares of KB Home falling after hours after earnings, down now by about 4.1%. 10-year yield 2.28%. Gold up 1.2%, 19.45 the ounce. West Texas Intermediate crude up today by 4.8%, 114.45 a barrel. So again, recapping, equities lower, S&P down 55, a drop of 1.2%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellett. Well, Tim and I recently, we've talked about this a bunch at the Bloomberg Live Work Shifting event, had several conversations about what work looks like on the other side of the pandemic, what's normal. It's something we know we are all continuing to redefine. And so in keeping with that, 1 week ago, Audible signing a deal with the workforce tech company One Huddle, giving Audible employees access to the company's offerings and helping with worker development, helping with training. So it's like all fits into kind of this new world order.
Something that we talk about each and every week, right? The idea of upskilling and how workers can be, what companies can do to attract and retain talent in this environment. Don Katz is the founder and CEO of Audible.com, also the founder of Newark Venture Partners. Sam Caiucci is the CEO of One Huddle. As Carol mentioned, it's a platform. It uses mobile games for workforce training. They are funded in part by Don Katz's Newark Venture Partners. They both join us on the phone from Newark, New Jersey. How are you guys doing?
Well, I'm very good, Don, and I'm just great to be here, Tim.
Yeah,
Carol, wonderful to be with you again.
Hi, guys.
And, what a treat to be with Sam, a fantastic entrepreneur with an amazing company.
Well, Don, that's where I wanted to start, where this partnership started and how you guys came together.
Well, I don't want to go too far back, but Newark Venture Partners is one of my great points of pride. It's something that has become when I'm asked to talk about what goes on in my world internationally, it's Newark Venture Partners is as much high on the list as talking about Audible's growth and success over the years. Sam Caiucci is just an example of one of the people who came to us with basically just post an idea for a company to disrupt something that's been very, very complicated for years. You guys probably know there's a graveyard of large companies that tried to do corporate learning and training and basically diverting employees to do various things on the desktop, and they've figured out a fantastic gamified way of doing it. But what's really pride point is that they are key to these 98 companies that Newark Venture Partners has brought into Newark, New Jersey, where we're proudly headquartered. We went there in 2007. I think Carol remembers, with about 100 people, and there's about 1,900 of us there, and we have people all over the world in many, many global centers. But it's been an amazing experience to have this venture fund, which is kind of, people may not know, it's double bottom line concept where you have profound social impact by planting high growth technology companies and bringing them into Newark to be with us. and this huge social output, as well as has great returns for investors, and also a fantastic chance to have people who work at Audible, who have a lot of subject matter expertise across everything you can think of, help mentor and help these companies to really differentiate it from other venture funds.
Yeah, it is pretty remarkable. I'm a Jersey girl, and I think about the impact that you guys have had, certainly on the Newark area. Hey, Sam, come on in on this conversation and talk about the partnership with Audible, because you guys, it's really thinking about the community and how to improve the community as well.
Sure. Thanks for having me. Don said double bottom line, and I think from the early days of moving to Newark and being able to watch and observe how a company like Audible has been a leader in the community. From every corner of the organization, their team members get involved. And, this partnership is a testament of, on one hand, Audible is going to be expanding their investment into their workforce, which they already do a tremendous job of thinking about mission and culture and core values. And in this future of work moment, we all know connectedness is hard. And, so on one hand, it's Audible investing in technology infrastructure to keep their workers connected, prepared, ready, and developed. And on the second prong, it's also investing in the community. Part of this partnership, Audible is, stepping forward and top of other many initiatives are doing in the city to make One Huddle as a tool available to community organizations, ranging from groups helping homeless youth to returning citizens to younger mentorship programs, to make sure that the community also has access to a tool like ours as they prepare for the future of work.
Well, Sam, stick on that a little bit, because, for people who aren't familiar with One Huddle, give us an idea of the games that are offered, because you guys have thousands of games that are on demand. Enterprise companies can use it. And I'm wondering, how you get employees to use it. Is it part of like a mandatory training, or is it something that they're expected to do, as something that they find so engaging that they just start playing it on their commute?
Sure. Over 90% of gameplay on One Huddle happens off the clock or around the edges of work.
That's amazing.
So I think that what we've learned is you can learn anything in a game. I could use Wordle at this moment, looking at other products that use.
You're speaking Carol's language right now if you mentioned Wordle.
Oh my God, I'm so in love with it. Okay, go ahead. Just got about 30 seconds and then we'll come back and talk more. Go ahead.
Yeah, the idea is, take something everybody needs to know, make it accessible to them on mobile first. But the competition, everybody on One Huddle at Audible and the communities we work in, you learn by playing. And that creates an opportunity where workers raise their hand and want to do training, don't just have to do it.
Well, and if you think about, gamification, right, and you think about a younger workforce, they're so used to kind of gaming and playing that to kind of incorporate into training and so on and so forth, it's really productive. Guys, sit tight for a second. We're going to come back to Don and Sam. In the meantime, though, we want to get back to world and national news and to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden has arrived in Europe on a trip that comes during a critical moment for the war in Ukraine, as Russia continues to pummel cities with airstrikes and artillery. Biden will be meeting with NATO, the European Union, and G7 leaders, and he is likely to press for new sanctions on Moscow. Commerce Secretary Gina Raimondo tells Bloomberg unity is crucial if they want to rein in Vladimir Putin.
I think it's as much about staying strong and being vigilant on enforcement and keeping the coalition strong and tight over time. If he's struggling at that level after a few weeks, imagine where he'll be in a few months.
Raimondo tells Bloomberg they are prepared for all kinds of scenarios. Executives of the American semiconductor industry are asking Congress to support subsidies to expand production in the U.S. Bloomberg's Irv Chapman has more on their testimony today before the Senate Commerce Committee.
The chief executive of Intel, Pat Gelsinger, told Senator Lowell Wicker the U.S. government has to do what the Asians have done.
The Asians aggressively pursued this industry with high incentives.
Financial incentives provided by governments.
Primarily, Korea just announced the $100 billion capital incentive program. Without such steps, we will never have the opportunity to restore this industry on American soil.
Gelsinger said Pentagon money started his industry. The next generation of semiconductor Semiconductors will power the next generation of technology, from self-driving cars to advanced vaccines. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Okay, this is a company living up to its name. Its new name, I should say.
For a select few people who work at Meta Platforms, Inc., formerly known as Facebook.
Right.
They're spending a lot of time on the road.
Well, and listen, the name change to Meta, and I'm really cheating from this Wall Street Journal Dow Jones story. They talk about, when the company did change its name back in October, signaling that it thinks virtual first interactions are the future of the internet. And so when it comes to a lot of the senior executives, you're more likely to interact with them virtually because they're not at headquarters.
I mean, if you owned a large portion of beachfront property in Kauai, like Mark Zuckerberg, would you be trying to spend as much time there as you could?
Probably.
Okay. Well, this actually is, not necessarily just about Mark Zuckerberg. Naomi Gleit, the company's head of product and one of its longest tenured employees, has relocated to New York. Alex Schultz, who's the CMO, plans to move to the UK. Guy Rosen to split time to go to Israel. Javier Olivan, who's the chief growth officer, splitting time between California and Europe. Adam Mosseri, who's the head of Instagram. He's been at Facebook for years. I think he's the one who invented Newsfeed. He's been traveling and working remotely from Hawaii, Cape Cod, Los Angeles. That's according to people familiar with the matter. And I should note this story from the Wall Street Journal by Salvador Rodriguez and Deepa Sitharaman.
Yeah, exactly. Mr. Zuckerberg also spending time, did you say, more time away from the company's headquarters?
No, I just assumed he would be, given his the place in Hawaii.
The headquarters are in Menlo Park, California, and this is, again, according to people familiar with the matter. Mr. Zuckerberg regularly spends extended periods at his compound in Hawaii and his other homes outside of the Bay Area, according to those in the know.
What's the point of a compound if you don't spend time there?
That's right.
That's my question to you,
Why have the
Carol.
compound?
Yeah.
We're having some fun, but it really speaks to, again, I'm going to the Bloomberg Live work shifting, we have shown during the pandemic, unfortunately we had to because of the pandemic, but shown that you can be productive, you can work virtually, and you can get a lot of stuff done. It can work.
What does it mean for the employees at the company, too?
What does it mean for those headquarters in pricey real estate? All right, you're listening to Bloomberg Business Week. We're going to get back to Don and Sam in just a moment, right here on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Biden administration plans to reinstate exclusions from Trump-era tariffs on about two-thirds of Chinese products that were previously granted waivers, most of which expire by the end of 2020. Renault says it will halt industrial operations at its Moscow plant and is considering its future in a joint venture in response to the war in Ukraine. After earnings, KB Home shares down now by about 4% in extended trading. A down day for the Dow, the S&P and NASDAQ. S&P fell 55, down 1.2%. The Dow down 449, down 1.3%. NASDAQ down 186, down 1.3%. 10-year yield 2.29%. Two-year yield 2.09%. Spot gold up 1.2%, $19.45 the ounce. West Texas Intermediate crude today up 4.6%, $114.27 a barrel. Briefly, Jekyll and Hyde Club. It's a New York restaurant popular with tourists for its horror-themed food and shows, has filed for bankruptcy. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. We do want to get back to our guests. Don Katz is with us, founder and chief executive officer of Audible.com and founder of Newark Venture Partners. He's on the phone from Newark, New Jersey.
Also, Sam Caiucci, the CEO of One Huddle. It is a platform that uses mobile games for workforce training. They're funded in part by the Newark Venture Partners, which is, of course, founded by Don Katz as well. A couple things to note here. The Audible partnership, a $1 million deal with One Huddle. Don, I want to go back to you to talk a little bit about this because I'm wondering what your goals are at Audible in terms of providing this skill training to the workforce there. And then I want to move broadly outside of Audible and talk about the Newark community and what you're doing there too.
Great. Well, let me just a couple quick things. So, Tim and Carol, I'm now chairman of Audible. I'm executive chairman.
Oh my God! How did we?
Fantastic CEO named Bob Kerrigan. I get to be the, the proud, I guess maybe grandfather.
Maybe spend some more time at Newark Venture Partners too.
Yeah, no, the Venture Partners. I'm still founder and obviously a huge supporter. And a deal like this is kind of a no-brainer. And it's one of the great advantages of the structure of Newark Venture Partners, which it's not a captive venture fund, which used to be these things where one company would create a venture company, and not real popular with founders because there was one exit strategy. Lots of corporations and lots of individuals and lots of even nonprofits have invested in this, and it allows all of us to have business development opportunities like this because we look up close, we know the character of the company, we know the people, and our people get interact. It's a great model. And I just have to say one other thing is a fantastic story and funny about Meta executives, kind of dissipating all over the world.
You were listening, were you?
Various beaches and the virtualization of work, which is kind of related. I got to tell you, there's nothing better than moving to a place like Newark where the quality of human beings and the capacity to give people a chance as part of what your corporation does. It unleashes a level of energy inside our company that makes it one of the more exciting cultures that I've known about. And, you guys might know I spent 20 years writing about corporate cultures and corporations before I started Audible. So it's just it's a kind of germane because what we're doing now is trying to, I think, capture the essence of what this complex and kind of dense corporate culture that we've created over the years, which brings together, the best of the most advanced technology, and we invented the first digital audio player way back when, along with this tremendous cultural impact we have. We're the largest employer. We've employed 60,000 different performers and actors over the last 10 years, and then you add in all the different executive characteristics, and then the fact that we've managed to hire people from all over Newark. There's not a neighborhood or street that somebody doesn't work, often trained from unlikely backgrounds into sophisticated jobs. So it's all part of this pastiche. And if there's any company that could capture that in a way that new employees and other employees, can learn and become, more sort of one with the acculturation process, of being part of who we are in a distinctive way, then this is the right company. So we're really proud to make the investment.
Well, and I'm curious, and Sam, come on back in, in terms of post-pandemic, this very tight labor force, how we are rethinking, training with workers and reaching out to maybe populations of workers that we weren't seeking out. And also the ability of hybrid to basically be anywhere and work for many different companies, which wasn't necessarily the case, right? If you wanted to work for maybe a certain company, you had to be near where they were geographically located.
Sure. I mean, we know that companies today need to invest in better infrastructure to stay connected to workers wherever they may be. We also know that, when I moved to Newark, one of the things I realized by, walking Broad Street and being a part of the community is that depending on where you sit in an organization greatly impacts what access you have to opportunities to develop yourself personally, positionally, and professionally. And data shows 83 cents of every training dollar goes to the top, doesn't quite get down to the low-wage workforce that makes up the majority of our workforce today. And, I think companies that are thinking about future of work are having to rethink what technologies they're using to keep people connected, not for the job they're in today, but maybe for whatever the next job may be. And I think through this partnership, Newark is showing that Audible is showing a commitment in the community to go beyond just their team members and reach out to the folks in the community that may help maybe work at One Huddle someday, or may work for the next startup that's coming to Newark, or work for another business that's here in this great city.
Don, I do feel like the last 2 years, we've been talking about it a lot in terms of financial markets and where we were 2 years ago at the start of the pandemic, and markets just coming undone, the economy, our world as we knew it coming undone. But I also do think about, we've stressed the importance of community, right? We had to during the pandemic, and then the killing and murder of George Floyd, like thinking about much more broadly the different communities that maybe we don't always think about. How do you hope this partnership does continue to build on what you have done for that Newark community?
Well, obviously, if this could be a way of continuing to train people who didn't think they could have jobs at a technology-driven company, and we can welcome them and also use the system because we have a massive global workforce, it could be an incredibly powerful way to convey a sense of who we are. But what you said is obviously painful. This has been a 2 years where inordinately people without privileges in society or wealth were much more hammered, as I'm sure you know, than obviously people with assets, and the numbers show that. And it's also true that the abandonment of the downtowns by corporations in more historically challenged areas is far more devastating in terms of job destruction and the like. So we did respond, as we tend to do. We did another startup called Newark Working Kitchens, which is a huge success, where it was very simply, we have 30 restaurants, and we started buying 200 meals a day, and then using our trucks to actually target the delivery of the meals to people who were stuck either in housing projects or had COVID, or obviously had health reasons that they couldn't be traveling, and people don't tend to have cars. So it really served a real purpose, and we served 1.4 million meals to many, many thousands of people. So it's the kind of thing that once you're in a city like that, you know the city, you're proud to be in the city, as Sam and I are, and Sam's amazing. Well, he's like a poster child. Everybody knows Sam in Newark, and he's got another job building this, what's going to be a huge Audible-sized corporation. But he, the idea of having that kind of, passion for other people's lives, and also having a business purpose, you just can't do anything better than that.
Wow, he's got a great model in you guys, Don. Our thanks to both of you. A really thoughtful conversation. Felt like I really needed that on what's been another crazy week and another rough day. Don Katz, founder and executive chair of Audible, founder of Newark Venture Partners, and Sam Caiucci. He is the CEO and founder of One Huddle. From Tim Stanovic, I'm Carol Masser. Have a safe evening, all.